Good morning, traders. Quick rundown what I'm seeing in the market this morning. Put things in context real quick. Okay. And so we got the ES's, NQs on my chart, TLT, and VX futures on my chart. This is my primary view for trading in the mornings. So let's put things in a bigger context. Okay. So we had this poor support area that developed last Friday. We rocket shipped into a new trading zone. Okay. So what we did, we came down awfully close to that yesterday, and we took part of that poor. There was poor support. We took part of that out yesterday. So they found buyers down there in that poor support zone here on ESs and NQs. The NQs this morning are showing a little bit more relative weakness, slightly more relative weakness because of the we're back down closer to that the lows of yesterday on NQs so far this morning. But my main takeaway is, so we have an uptrending channel. You can use that yellow line there. That's the midline of the uptrending channel. And here's the bottom line on the NQs. Here's the midline on the S&Ps, and here's the bottom line on the S&Ps. So basically what I try to do on these channels here, we go up, we reject like the midline or something like that. Uh, you can revert back down to the bottom of that and then rebound. More times than that, you're more likely to uh, digest the mid of the channel for a further push higher to finish to go to the top of the channel. Okay, so that's the two scenarios that I'm really looking at here. So, some little takeaways that I do want to point out here. Even like on the NASDAQ, if we came down to last Friday's lows, which we have not, we tagged on Tuesday. We tagged Tuesday's lows. So even if we were to do that today in a technically bearish, that's still not bad relative to your channel. I still think that those are buyable dips, even if we backtest last Friday's close. So the bias in your back of your mind should probably still be more into the bullish camp. And we're seeing a little bit better improvement on the bonds this morning. We're seeing improvement on the volatility getting crushed this morning. And I just think volatility needs to get cheaper for us to have a sell off of the market. And, that means that they can just go sideways for days or weeks, get volatility back down into the low 15s, 14 range, and then they might decide then to take us lower. This is technically 50% from all-time highs, the 50% rejection area on the NASDAQ and ESs. I mean, this is where you would typically look for a bear market rejection or a bear market rally rejection area. This would be technically where you would be looking for. That's why we might have to sit here for a few days until the market finally decides which way they want to break this thing, which direction. Get some more data from the earnings and stuff. So far this morning, the banks are out, and I got a little watch list here, and these are the primary things that I'm going to be watching this morning. UNH, JP Morgan, Wells Fargo, BlackRock, Citi, Apple, NVIDIA, Tesla, Chevron. This is kind of the stuff that's happening, hitting the market this morning. United Healthcare is the biggest weighting on the NASDAQ. It's going to report here in just a little bit. Or not NASDAQ, the Dow Jones. So it's the biggest, and Dow Jones is price weighted. So whatever happens to UNH is going to have a big impact on the Dow likely today if we get some sort of action in United Healthcare. We're near full employment here in the United States. Yeah, you would think you're probably going to have a beat on UNH. It's up this morning. The more people you have employed, typically UNH tends to do better, and we're not really in any type of pandemic or anything. So that's just a few things I'm looking at here. Trying to keep it, you know, keep it short here. But I got some downside targets on my charts. In case things were to get rocky here. But the bonds and volatility both suggesting to me that buy the dippers are probably going to be prevalent in today's session. So we'll see what happens. I mean, I don't know. Time will tell. And other than that, be careful and um, and we have not. Uh, so we have a really critical uh, all-time high. So here, this here represents the recent swing high, 50% retracement. This here represents the all-time high, 50% retracement on ESs. So we came just a few ticks shy of that number. And right at that same area this week is the 50 SMA on the daily time frame. Both of those are lining up perfect, right at that area. So I am not going to discount the idea before the day is out that we rally hard up into that zone to finish at some point today to finish out the week. So uh, I definitely do not want to, because we technically have not actually, we missed it by a few points yesterday. Uh, I don't know if the markets are strong enough for that. You're outside the market maker move. Uh, but whenever you get into the late Friday, the market makers have got themselves positioned where they want to be. So that's definitely a possibility. But they might prove me wrong. Maybe we sell off today, but from what I'm seeing, we're holding last week's breakout move into a higher distribution. It, we're having trouble. There's buyers down there showing up every time we get down into that zone so far this week, and the bonds are suggesting to me supporting the mid under markets. Okay. Yeah, 6 minutes. That's good enough. Okay, guys. So that's pretty much all I got to say here. And but yeah, today is all about the banks, and so keep an eye on that. And there's nothing really oversold in the markets that really jump out to me that I need to get into. I'm still watching Boeing. I love Boeing around the 185 area. I think you can scalp it, scalp trade it to the upside when every time it gets into this 185 area. That's where it's at again today. So, uh, I'm going to continue trying to scalp that one every time it gets down here and see what happens. Okay, see you later.